Hello, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello everyone and welcome back to Ask Rob and Rob, where you ask us questions and we give you answers. And believe it or not, the format has not changed, but the questions have, you'll be pleased to know. And we've got some great questions in this week. So, if you've listened to the show for a while and you've had your own questions, you're probably thinking, how do I do that? Well, in case we've never mentioned it before, it's really easy, and you've got more than one way of doing it.
Two, in fact. First way is to call 013 808 00035. That's 013 808 00035 and leave us a voicemail. Or you can leave us a voicemail via your computer instead by going to thepropertyhub.net/ask, ASK. That's what our first questioner did this week. He was too bashful to leave us his name, but thankfully he had a great question. Let's have a listen.
Hi, Rob and Rob. Love the show, by the way. I think it's really, really good. I have a question about interest rates, if you don't mind answering. Now, I know that when entering into a deal, if you analyse the numbers and they all stack up, then you minimise the risk. However, the only thing I can't control is interest rates. I always stress test my potential deals up to about 7 or 8%, but if it went higher than this, I wouldn't be able to sustain the mortgage payments for very long. Being 32 years of age, I've never really known interest rates to be very high, but I do know that in the past, interest rates have been as high as 15%. If I'm leveraged with, let's say, 10 properties and interest rates soar to what we saw back in the 80s, I could be in a spot of bother, particularly if I cannot shift the stock and it ends up costing me money out of my own pocket each month to keep hold of them. I just wanted to know what your thoughts are on this and what can I do to mitigate the risk if it went bad. Thanks and keep up the good work.
Good question. And one you'll be pleased to know we've answered before, several times actually. So I think you've raised some really interesting points. And I'm going to start with the interest rates in the past, because I think that's really important. In the past, interest rates have been a lot higher than they are today. In fact, nearly throughout history, they've been higher than they are today because we're at historic lows. However, in the 80s, the era you've particularly picked out, interest rates were double digit and quite scary. So it's understandable that people who are a little bit more cautious, and I think it's great you're looking back that far, because as you point out, you're in your early 30s, so you didn't feel that pain yourself. So I think it's great that you're observing that. But what is key here is that I can't never say never, but I can't see it happening again, certainly in the short to medium term. And here's the reason why. In the past, interest rates were controlled by our government. So the government would decide when interest rates would move up. And they didn't really know what they were doing. They would move interest rates, several times over a few months. And actually, economists now believe that if you move an interest rate, the true impact of a change takes a full 9 months to filter through. So they really didn't know what they were doing. Thankfully, the Bank of England was set up and they conceded power to the Bank of England, who now make those decisions. And the Bank of England are made up by highly qualified economists who certainly do have a better handle of the economy. And the fact that they've kept inflation in check and everything seems fairly normal suggests they've done a much better job than the politicians that preceded them. So that's the first thing. I'd say it's unlikely to happen to go up to those levels again. The other thing is you're stress testing at a great rate. I think if you're stress testing at 7 or 8% and your deals still work, then I would relax. I think that's more than enough. I stress test to a similar amount and my deals work at that percentage point as well. But the other thing to remember is interest rates will go up. They're not going to go down any further. I really don't see that happening. Eventually, don't know when, but they'll start moving up. When they do start moving up, it doesn't necessarily mean the mortgage products will move up. Because I actually think that if interest rates are moving up, it means the market's really kicking on. Things will be looking good for the property market. And therefore, lenders will be getting more competitive and take smaller margins than they do now on their products. So, for example, 2-3 years ago, the average interest rate on a buy-to-let was 5%. But because these companies are now more competitive, the average rate is just under 3%. So it's dropped 2%, but interest rates haven't dropped 2% in the last few years. So great question, because there's not just one part to that answer, there's several, but hopefully you'll find that useful.
Yeah, loads of great points in there. And one that I would add to that is that when you do look back at the interest rates in the 80s, when they did spike to sort of 15% or wherever it was they didn't stay there for very long. So even if things got above your comfort limit, well, that's why you have an emergency fund. So even if you were stress testing at 8% and somehow it got to 10%, which as we've discussed is highly unlikely, it's even more unlikely that it would stay there for any length of time. Therefore, you wouldn't be subsidizing the property for particularly long. But as Rob says, good on you for thinking along those lines. If there's one thing we can be sure of, it's that interest rates will at some point over your investing lifetime be higher than they are now, and they're very unlikely to be lower. So although you don't have to stress about it, thinking about that kind of thing is very much worth doing. Okay, let's move on to our second question, which has been sent our way by Charlie.
Hi, Rob and Rob. It's Charlie here. Thanks for all your great output that you give us all. It's great, really interesting and helpful. There's one area I don't think any of your episodes have covered yet, and that's the area of retirement properties. It doesn't seem to me that investments in this area have to have the conventional fundamentals that you always say property should, but I just wondered what you thought of this. The country has an aging population and there are properties being built all around the country for retired people. But I just wondered what you thought about it. Anyway, it'd be great to hear from you. So thanks. Bye.
Okay, really good question, Charlie. You're right, that's not something we've really talked about before, but I can see this being an opportunity. I actually see it in a way as being the opposite from buy-to-let, in that in the buy-to-let sector, it's traditionally been dominated by individuals, and now you're seeing companies starting to get into the market. With retirement homes, traditionally it's been dominated by corporates, but now you're just starting to see some individuals getting into the market. And I know that in America, it's becoming a bit more of a trend for individuals to own small retirement homes, so maybe under 10 people, rather than the whole market being dominated by the big players with hundreds and hundreds of rooms. So wherever America goes, we do tend to follow. So maybe it'll become more commonplace here. And as you quite rightly said, in terms of demographics, the demand is absolutely going to be there in the years to come. So what I would say about it is, yes, if you did do that kind of thing, it's a property investment, but it's very much a business as well. We talk about how all properties are businesses. We talk about how HMOs need to be run even more like a business. And in the case of retirement homes, it would be even more like that in terms of the marketing, the staffing, the catering. There's a lot there to think about that you wouldn't really have to think about in anywhere near the same way with a normal property investment. So I can see it becoming more popular. I can see it being a really great opportunity. But for me, it's a hybrid. It's a property investment and a business all in one. So if it is something you want to go into, make sure that you're up for both parts of that challenge.
Yeah, absolutely agree. And fun fact, Duncan Bannatyne of Dragon's Den fame actually made most of his money from care homes. So there you go. Little word of warning, though. There are some companies that package up care homes and sell them off in little slices and say that you can use them for your SIP. You don't have to run them, but you can still invest in them. You are overpaying for that. They come with apparently guaranteed returns and other bits and pieces and bells and whistles, but they're very much like the student pods and the hotel rooms you can buy, loaded with big commissions for the sellers, and almost certainly not a good investment for those putting their money in. So just be aware of that. But absolutely agree, the business side of it, where you go in, all in, really interesting model. It's only going to keep growing, that business, because people are getting older. That's a good thing. But it is a business, like Rob said. Okay, Rob, we've got something exciting now. We've got thousands of subscribers to the magazine, and people can go on the Property Hub and subscribe via the website. But we decided to make it even easier. So those weirdos, I'm really joking, those people who haven't yet discovered the wonders of the magazine can now subscribe even easier than before. Yep,
it's as easy as picking up your phone. So just send us a text if you're interested in learning more about subscribing to the Property Hub magazine. All you've got to do is send PROPMAG, 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 followed by a space and then your email address to 88802. So that's PROPMAG, a space, then your email address to 88802. You will then get a text straight back, and we'll send you an email as well with more information about the magazine and a direct link that you can click to go and start your subscription. As soon as you do, you'll get access to all the back issues, and wow, there's a lot of value in there. And you'll also get the next issue and all future issues dropping through your door, and the next one is going to be a cracker. So if you're not already a subscriber, now would be the perfect time to pick up your phone and put that right.
So that's us for another week. We'll, of course, be back on Thursday for the Property Podcast and back next week for Ask Rob and Rob. Remember, if you haven't got your questions in yet, make sure you do. We love turning up every Tuesday and answering them. But until Thursday and next Tuesday, for now, we say goodbye.
Bye-bye.